Hey, what's up, guys? I want to give another market update today. I'm actually traveling for a wedding, so I'm going to make this video kind of quick and to the point. If you haven't already, please go ahead and smash that like button. Comment down below your thoughts on the market, what stocks you're buying, but also please hit that subscribe button and to support the channel. So I wanted to start off kind of with like an economic update. I think, as you guys have noticed over the last kind of year and a half, 2 years, we've been seeing record high inflation, at least within the last, 2 decades. Consumer reports are showing that people are starting to, search for more deals, cut coupons. They're settling for more affordable options, substituting steak with like ground beef, even ground beef with chicken. And the consumers are focusing more on their core needs, day-to-day expenses that keep their lives going. We're seeing, I guess, further economic slowdown kind of on the horizon. I think with increased interest rates, as well as, that sticky inflation is causing kind of everything to slow down around us, right? So this morning, kind of feeding on top of that consumer slowdown, I think you need to buy stocks that have good pricing power, right? So you could always buy an index like VOO, SCHD, SPHD to kind of cover your base. But I think like, those companies like Microsoft and Apple, right? Like people will give up eating out to maintain the next iPhone or keep their Apple services going. I think that Apple is so ingrained in our lives. That's kind of an example of a stock, or even like an AT&T, right? Like everyone's going to keep their cell phone on. You need access to internet, texting, calling, etc. I think other stocks that I don't have listed here is kind of like a Walmart, for example, right? Like people start to go to a little bit more of the bargain stores whenever prices continue to elevate. This morning, whenever I was looking at these stocks, it was kind of more a sea of green. And, we'll go up here. If you notice, at the market open, the market was kind of up, right? And the reason why they were doing that, a lot of the market is baking in a compromise on the debt ceiling and, the government basically continuing to negotiate. And I think that it was looking good up until a point. I think one of the things that kind of changed was as I'm filming this video, the Republicans have decided to kind of halt the negotiations. But, I think this is just another tactic where, it's politics, right? Both sides end up doing this every time, and they will come to the conclusion at the end. Another point with a stock about cutting back, I wanted to kind of highlight Footlocker, right? So Footlocker here has dropped about 25 to 27% this morning, missing out on both their top and bottom line, right? They reported earnings per share at 70 cents versus the analyst estimate of 81 cents, and then revenue of 1.93 billion versus 1.99 billion expected. This is a prime example, right? Footlocker sells obviously shoes, and I think a lot of times this is kind of a consumer discretionary, right? Like obviously you need shoes in order to go to work, in order to go outside, exercise, etc. But the thing is about this is that, you only need one pair of shoes or 2 pairs of shoes. But a lot of times, people buy multiple shoes to match their outfits. And this is a prime example of folks cutting back, as we go deeper into a potential recession, as well as, the fears around the debt ceiling. One of the things too, like right now, if you look at analyst estimates across the board, a lot of people are telling you to, hey, sell your stocks, get out of the market. With the volatility, with multiple things, inflation, jobs, and other economic factors, people think that S&P 500, which is kind of an index over the 500 biggest companies in the United States, that, we're trading at kind of high prices. And if you're looking over the last, kind of 3 months, year, it's been going up. Again, this will go back to multiple things that I've said in the past. Time in the market beats timing in the market. To me, I never try and time a market event where I sell out of my stocks at the top and buy at the bottom. The likelihood that you're going to be able to time that appropriately is slim to none. What you need to do is dollar cost average into the stocks that you have high conviction in, because there might be a pullback, but what you need to do is have a buying opportunity in those stocks. Make sure you shore up your cash position, especially while high yield savings accounts are paying 3.75%, if not all the way up to 4.25%, right? So make sure you maintain that dry powder in the event that your favorite stocks start to fall down and then you continue to buy. You know, like right now, Kenvue is one of the ones that I'm buying into. I started, a position not too long ago in Visa. Think about every time you swipe your card, every time you buy something online, Visa will make some money off of that, right? One more kind of highlight here is, my Republic First position doing pretty good. At the market open, we went as high as, $1.37. We're seeing the recovery in the regional bank space, but I still think that depending on what the Fed does on the June 14th rate hike, we could see that either continue to improve or, reverse course and deteriorate. Hope you guys have a wonderful weekend. Next week we'll kind of go through the main routine of opening up my options plays. Again, I've been running the wheel strategy on Plug Power, as you guys have known from following the last couple of episodes. And that is doing pretty good. I need to do a video on how do you adjust your cost basis while you're running these certain option strategies in the event that you hold the position long, like I am with Plug Power. The record here shows 950 as my average cost basis, but that's not necessarily accurate once you bake in how much money I've made from options premiums, both on the put and call side. Finally, what I'm going to do is I'm going to go ahead and go to my history, go to the brokerage account. We'll take a look at the dividends first. In the past 90 days or 30 days, excuse me, I got a 1 cent from Realty Income, $8.75 from Main Street Capital, 2 cents from Apple yesterday. And then kind of on the docket for June, I have Aflac, Visa, Intel, Archer Daniels Midland, and Microsoft kind of queued up to pay. I will go back to all types of activity. Scrolling back through the week on the 15th, I had opened up, or I got those dividends, but then I had also opened up a couple of options plays. I sold a $3 covered call on Plug Power. I did a put credit spread on the S&P 500 Index SPY, made a quick $3 there. Bought a little bit of additional VOO with that premium, got my dividends that we saw earlier, my reoccurring buys. That options contract expired worthless, so 0-0. I ended up opening another put credit spread on SPY for an additional $4. That expired worthless yesterday right here. And I didn't open up another one because I didn't want to do a same day trade, but I'll probably open up some more put credit spreads next week. I think the market continues to go higher, and I think that we could see resolution on this debt ceiling thing as early as next week. And if that's the case, then I believe that we will see the markets roar higher. Let me know again what stocks you guys are buying. Please comment in the description or comment down below. Again, smash that like button, and if you're still here, comment cookie in the chat. That way I know you guys are my most loyal supporters. And again, please, share this channel with your friends, family, or anyone that likes stock market investing in general, right? Appreciate you guys, and have a wonderful weekend.